Good afternoon. Welcome. I'm excited about today's topic. I thought it was a very cute title, Erica. Way to go. The Stay the Course, of course. Dave's got some data and some interesting information, as always, on this. But raise your hand if you have questions. We can unmute you. You can talk or shoot us a chat, and we'll be watching for that as we go. All right, Dave.
Go ahead. Oh, you hit your.
It's all right. I'm assuming it's all you.
Okay. All right. Well, it's a good thing we're getting to be professionals. The handoff is so smooth now. This is perfect. I like it. All right. Well, welcome everybody, and thank you for joining us. And I know that the last couple of days have been a lot nicer than January. Most of January was, and maybe everybody's a little more at peace and comfortable and so on. But the reality is that the market has entered a new period of volatility, and I know you knew that we would say you have to stay the course. Of course, we have to stay the course, but I think it's also warrants some discussion as to why and what's going on beneath the markets. And there's so much news out there. I say it all the time. I'm going to keep saying it. We have a distorted view of our world, period. Everybody gets fed whatever left news or right news that you prefer. And everybody knows more about what they already believe in all of the time, and they actually think they're more informed, which is really quite a remarkable human feat to be able to convince ourselves that by listening to the same thing we already believe in and completely discounting any other viewpoint would actually be increasing my intelligence. But we do manage to do that. And even if we're careful, we still manage to do that to some degree. And that all, of course, leads us down into more and more of a distorted view of what's happening in the world, because the news is always screaming and yelling for your attention. That really can't be said enough to fully understand that news is not information. It's screaming and yelling, and it is a distorted perspective. It's really gotten to be quite bad. So when we're trying to think about how the world is, I think it's important that we do think about it and don't just go, okay, we're going to stay the course. So let's go ahead and pop on that, and we'll talk a little bit as we go through about, in my opinion, also how rational this market really is. So we're going to stay the course, of course. But one of the things that we look at when we're trying to decide all these things is that you have to think about the four most expensive words in investing are, this time it's different. Now, John Templeton said that many years ago, and other people have said it in different ways. But we all think it's different, right? And so John Templeton also said this: the only certainty about the future is the fact that it will be different from the past. They're both true. These are both true commentaries. But what most people focus on is the second part of this only. They don't take the first part in relation to the second part. Well, I don't think it's going to be different this time, like the market isn't going to come back. Well, maybe it won't, because, and then you fill in the blank of everything that's going on in the world. We really do think it's different every time, because we attach only our emotions to what hasn't been resolved. You can't go back and go, wow, can you imagine how bad it was in World War II when Pearl Harbor was attacked? I could just feel those planes going over there. No, you can't. You can't understand what it would feel like to shutter your windows. You can't understand what it would feel like to have the Soviet Union being able to send Sputnik around the world. You can't. Our country can't. You can't understand what it would feel like to have missiles in Cuba right off of our shore, this close to mutual destruction. We can't feel that. Perhaps some of you are old enough to have felt that, but it was resolved. But what we do now with all the information that's out there is we can go deeper and deeper in the rabbit hole. We can listen to talk radio all day long. We can watch news all day long. Blabber, 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 yell, yell, yell. And we can feel like we are getting more and more connected, but we're not. Getting more and more disconnected from truth all of the time. So we have to be very careful with that and find that balance. And so again, I know I talk about this a lot, but the idea that this time is different comes from the certainty that people have with all the stuff they're reading on the internet, and they go in the Stansberry research or whatever, because this guy who called this or bought Amazon at $1 or whatever genius it was, this guy is now saying this. And you're like, oh, well, maybe I should go check that out. And then boom, it's over. You're going down, you're spiraling down into more and more misinformation. Some of it has half-truths. There's too much deficit spending. Our money supply has gone way out of control. Washington, D.C., the policies right now are absolutely out of control. Spending is bizarre. The idea that we're like denying that there's inflation for as long as we did was crazy. It's like if we just keep saying there isn't inflation, somehow people will believe there isn't inflation and that we didn't cause it by too much spending, except that's what causes inflation all of the time. So when we look at these things and we see all of the things going on in the world, I understand it's hard to wrap our minds around why this time isn't different and the world will end. Okay, stocks won't come back, but they always do. And it's really easy to see that. So when we also look at it, we say, what's going on in the world? Okay, what's happening right now? And we'll see some charts here in a moment to kind of talk about some of those things. And it's important to understand that maybe this version of COVID, if you will, right? This strain, however you want to say it, is going to be the end of COVID. Exactly what scientists had hoped for. Exactly what we had hoped for. All of us. Something that was more like a cold. Severe or not, a cold. That's what we'd hoped it would become. That's what scientists told us at the early stages it would be. Maybe that's where we're at. We'll see. But let's take a look at some of these things and think about why it is. We cannot, you absolutely cannot time the market. Now, you've seen some of these charts before, but they're always great to bring up. They're great for us to review as well, because the reality is, this is why we say things just really don't change. If you miss just 10 days in the last 20 years, the 10 best days in the market, in the last 20 years, your return collapses. It's less than half. It's almost zero if you miss 20 days. It's below zero if you miss 30 in 20 years. So when we say you have to stay invested, you do. It's simple. But here's the thing too. A lot of really smart people will tell you this. Oh yeah, well, if you just, but here's the thing. You can miss the worst days too. Okay. Well, here's the problem. When you miss the worst days, because 7 of the best days occurred within 2 weeks of the 10 worst days. Really? You're going to be able to get in and out and in and out. And in. I mean, that's insane. You can't. And so the reality is, for the investment that has performed better than anything else on the planet, bar none, requires nothing of you, and you can't trade in and out, we still have this built-in urge to do it. But I love this because it's really like, well, when could you? Isn't it like obvious when it's the bad days? I mean, think about what happened on Monday and Tuesday this week, Friday last week. Markets are ugly, they're sloppy, they're terrible, they're horrible. And then all of a sudden, boom, turnaround. I mean, like boom. For what? Did the Federal Reserve cut rates? No. Did somebody announce amazing earnings? Yeah, a little bit of that. But it was really more like those amazing earnings started to catch on. And of course, Apple did have a good day. Apple had a great quarter. Apple's had a great 20 years, right? It's been crazy good. But we can't trade. And I know everybody tries to think that way. And then you also get people coming out of the woodwork. Oh, you can get market returns without risk. We know you can't do that. You know you can't do that. Tell your neighbor who maybe doesn't really know that or wants to believe it so bad, you can't. You just can't. There's no way that you can. I'm sorry, but I wish it was true. And the thing is I wish we didn't have to tell you this too, but people coming in and out of the market is amazing how bad people are. Just as when markets were starting to change, when we think of all of the crises, now the blue line backline there is what the S&P 500 has done up through 2020. All of those problems. Oh my gosh, Trump's going to be elected. Oh my gosh, no, it's going to be Hillary. Oh my gosh, no, it's not. It's going to be Joe, crazy Joe. No, it doesn't matter. The economy continues to grow. But look what people did. The red line is the cumulative equity flows, meaning people are literally taking their money out of the market. They're taking it out, not by a little bit, by a lot. Those are trillions of dollars being pulled out of the market as the market continued year after year, virtually uninterrupted, hitting all-time highs. I think we have an information problem. How is it that we can get more information, more data, and become dumber? Pretty easy, I would say, actually. I'd say it's become very, very easy to be dumbed down. Everything is just buried in this excruciating, if you will, confirmation bias we have. All those people on the left, they're idiots. All those people on the right, they're idiots. We only know what's going on. And I watch news to get more data about what I already know. And this is what we take for intelligence. And then we go on the internet and we find people that are scaring us. And we read more and more about how they're going to scare us. We're not going to come back from inflation this time. Okay. Why? Well, I don't know, but a really smart guy who apparently called the whatever correction back in the day says so. And he sounds really smart. And that's what I want to believe, so that's what I believe. It's too bad. But it does happen. But remember, corrections occur. And this is the first one that we've had since the beginning of the pandemic. Literally. The market's gone straight up. Straight up. But now it's going to be we're going to be all fussed about it. And I get it. Boy, there's a lot of things out there. There are. And there almost always are. A lot of things. A whole lot of things. Most people, I got to say this anecdotally from our client base, you guys are doing great. You're doing great. You really are. Now, I want to show some real news that you just don't see, ever. Nobody talks about what's really going on with COVID, right? It's got to have some kind of a political bias here. It's a disease of the unvaccinated. Well, no, it's not, but it's this, or it's just that. You got to do this. And everything goes on and on and on and on. Okay? Everything from Lord Fauci to conspiracy theories about putting things in the vaccines that are going to hurt people. Okay? It's incredible. Absolutely amazing. All this misinformation. Okay? But when it comes down to it, this is the kind of real information that's getting out. And this is data on children aged 13 to 18. During the pandemic, which is a very bad thing, you can see the blue bar and how high respiratory disease death was in 2020. But look what happened for drug and alcohol. We don't talk about it. You know, it's okay just to close the schools and keep people out. That's okay, because we only count a COVID death as a death. Every other death, every other repercussion to all of society doesn't really count. Not at all. But yet when we look at and watch the football games over the weekend and the packed stadiums, we're hearing about it. We're seeing it from Virginia and New Jersey and all the elections. People want their kids back in school. Why? Because the orange bar is real. It's real. People are dying for various reasons. And people know it. This isn't a political statement. And I know some people will take it that way. I can't help it. It's data. This is data. And this is from the CDC. Sorry. It's from the CDC. It's their own data. And I don't know why we argue about data, why it has to have a political spin, or why I somehow sound like I'm like a far right-wing nut because we're talking about it. But sometimes I hear that, and I don't know why, because it makes no sense. We have to have these discussions, but that's the point. It's changing, isn't it? Doesn't it feel different now? You're hearing people talk about this, that it's not okay just to say, well, we stopped this COVID death over here, but we lost 10 kids to drugs. That's okay. And we have kids, especially in the inner city, that are so far behind, they will never, ever catch up. That's not my opinion. That's according to the educators. They're never going to catch up. So what do? They're not victims. They are. It's changing. So the world is opening up. And that's the bottom line when we think, why are we looking at COVID data? Why are we looking at that? Why have we been spending the last 2 years looking at COVID data? Because it is why the economy is working, why it's coming back. There is no recession. There hasn't been. Of course, all the bears and all the naysayers out there, they've all called for a recession over and over and over again. It doesn't come. We're going to lock down. We're going to lock down. We're going to lock down. It's going to kill the economy. It's like they can't stop reporting anything that looks like, might smell like bad news. And so they beat it to death. We haven't had a recession. There's no reason to believe there's a recession coming. I know if you go on the internet, you'll find lots of people that believe that. Look, but when you're talking about serious commentators, serious economists, many of them are worried. We're worried about inflation, of course. This is Looney Tunes, printing money, and then we're just going to, and now we got to print more? Or we need a bigger budget? This is insane. And we've never done this before. So of course, thinking people are worried about it. And it's showing up, thank goodness. So maybe we can get out in front of it, which the Federal Reserve has been talking about. Well, they're going to raise interest rates. I know, they keep telling us they're going to raise interest rates. Let's not worry about it. And so when we look at this too, and how these people are predicting, I think it's fair to say they haven't done real well. They really haven't. And I love Yogi Berra's quote. We've all heard it before. It's tough to make predictions, especially about the future. It is. And this is just simple stuff like interest rates, not the whole dynamics of the economy. Not at all. That's really complicated. Super complicated. Look, it's not up, up, and away. There's lots of things, and markets go through tumultuous periods in time. They really do. And we're not just here to beat up on the Wall Street experts or the local news experts that babble incessantly about how devastatingly bad Corona is going to be when we're seeming to turn the corner. I just heard this today. We just heard this today, that frankly, that things are getting so much better in Boise that now they're starting to open up for surgeries again. And I thought they just basically locked it down. So it's getting better. It's getting better. It's getting better everywhere. It's peaking. It peaked in South Africa a couple months ago. It peaked in the UK a month ago. It's peaked in the major cities in the East Coast in this country. It's going to peak here too, and peak wherever you are. It's just one of those things that we're going through right now. The final throes of this, it feels, I don't know, I'm not going to make a prediction about it. And it doesn't matter if I'm an epidemiologist or not. And as I always say, look, I am so tired of saying, I'm not an epidemiologist, but here's some data. but it's like we can't actually just look at data, but we're going to just look at some data. And that's what we've been doing. And we're trying to understand it from this standpoint, not what's going to happen to coronavirus, but what's going to happen to the economy because of that. What's going to happen? Not did they do it right with having testing kits or not, or therapeutics or not. That's, everybody can doubt all that all they want. Okay. All I want to know is what is going to happen with the economy. Let me rephrase that. I want to know stuff, but when I'm commenting about it, I'm thinking about it. I'm thinking about what we're doing with our clients' money. That's what we're thinking about. not what I want Corona to be or not to be, not whether I'm afraid or not afraid, not what I wish or what I don't wish. And when we look at it, we see that economies are opening up and they're staying open, even in really, really locked down places, right? I mean, did you watch the football game in California? I didn't see a lot of masks. I didn't see a lot of restrictions going on in California. People are still going to restaurants. The economy is growing. And that doesn't even include the loony crazies in flyover country that have been moving and going for quite a while now. Europe quit trying. They're done. Denmark said, we're done. We quit. We're done. We're done. Many countries have said, we're done, or we're done next week or next month, whatever it is. We can't stop it. So why have all of these other suicides, drug problems, all these other things, all these treatments that go untreated because hospitals don't allow patients in? We're moving on. So I don't believe there's going to be a recession. If there's no recession, why do I believe that the market's going to tank? I don't. It doesn't make sense to me, okay? And remember this, okay? I don't think we're in a bear market, but think about it as corrections. Like, you make most of your money in a bear market. You just don't realize it at the time. That's so true. In down markets, we do, whether it's because we put more money to work in our favorite stocks. But I told you I would also talk about this as well, because this is one thing that I just really want to drive home as people talk about the crazy market, right? Because it just doesn't make any sense. It's flying here, it's flying there. It seems super rational to me. I mean, super rational. Almost everybody in our client base has an investment called Franklin Income Fund. So Franklin Income Fund, and you have stuff like Griffin Real Estate. Both of those funds are up year to date. That's right, in a market that has hit correction territory down 10% plus, they're up. They're up. That's rational because they're high income, they're not high beta. What does high beta mean? It means if the market's doing really well, they're on fire. And the stuff that just has nice dividends to it, a Johnson & Johnson, a Procter & Gamble, energy companies, stuff like that, doing fine. Down a little or even up. Very good defensiveness in the market. And the stuff that really killed it, right? During the pandemic, right? Everybody's going to get a Peloton, except now it works really good for extra clothes you can hang it on. Peloton's getting crushed. What about Zoom, the thing we're on right now? It's down 70%. Teladoc down 75%. These are real companies, by the way, that actually make money. But they got ahead of themselves and they've been crushed. Let me repeat that. There are many, many companies out there that are down more than 50%, 75%. That's a lot. That is rational. When you take out in the market and chop these up, the Robin Hoods of the world, the GameStop, the people that are the meme traders, I think I'll put $10 on the Knicks and I'll put 10 on GameStop too. That kind of thing. The gambling behavior. Blowing up. But you don't see Amazon and Google. Amazon was down 20%. That's a big drop for Amazon. On what? Just getting knocked down a little bit. So if you're ready and you like Amazon, you go, 20% off. Anything fundamental wrong with the company? No. 20% more shares for free. Okay. Boom. That is rational behavior in the markets. Extremely rational. Bonds getting killed as they did what? Interest rates are going higher. All of this seems to me to be very, very rational. But if you watch the news, it doesn't seem rational. Well, we're down a bunch now. We're up a bunch in the afternoon. That isn't rational. I get that. But that's one day. And it's a couple percent. not a big deal. But when we look at this over the last few months, we've seen the highest, if you will, the most volatile stocks, the highest PE stocks, the ones that don't make money or make very little and are selling for stupid high valuations, have been absolutely taken out and shot. All of them shot. Even the good companies, the ones that we're trying to buy, those as well. But the companies that are the core for widows and orphans and all that stuff, right? Dividend payers, they're doing fine. They're doing fine. So we may see, you will not may see, you will see an ugly statement for January. So what? You saw nothing but peaches and cream for 21. Nothing but up and away since March of 2020. It doesn't go up every single day or every month, just most of the time. And that's what we have to bear in mind. So as we look at this and say, well, it's not rational, it's not this, it's not that, and these guys are thinking there's this huge problem. Of course, you can pick on anything. And remember, fear sells. It always has. It always has. People aren't going to go to your website if you don't scare them to death. They just won't. They just don't. They just don't. So that's what people do. They run around, scare you. That's how you get people to buy these stupid annuities. And they're not all stupid, but the ones that we see out there and I talk about all the time, they're stupid. Anyway, that's enough of me. Let's hear from you. What questions do you have? Jen, let's see if anybody has some questions.
We do. If the Fed decided that inflation is a problem and they need to raise interest rates back in January, why are they waiting until March to do so?
Because they're wrong. They're just wrong. Mike, it's a great question. I don't have really any idea. Okay. So I heard a great analogy probably yesterday. Well, it had to be yesterday. Okay. So the Federal Reserve realized, this is what Powell did last week. He said, we realize that inflation is a problem now. Okay. And so we have been doing this bond buying program. In other words, injecting even more money into the system. And we realized we overdid it. We need to stop doing that. But before we fill that hole back in, I'm going to dig it deeper. I don't have an explanation, honest to goodness. I mean, it doesn't make any sense. We got to stop this program literally next month. But before we stop it and start refilling the hole we're digging, I need to dig it a little bit deeper. Why? I mean, only an idiot would do that. But they got some logic, I'm sure. Something like this is what we told people to do, so we're going to do it. Even if it's really stupid, we're going to do it. I don't get it. It makes no sense. It's really stupid. They should have stopped a long time ago, and they even acknowledged it. The best thing they did was at least not drag this out into summer and said we're going to stop in March. I have no idea why at that time, and I certainly said it on the radio show over and over, I don't know why they don't stop. Just stop. Just stop digging. If we want to refill the hole, just stop digging it. And they won't. And I don't get it. And I wish somebody would ask them that question. And I have not heard that question asked of Chairman Powell. But it's a great question. I don't know why they're doing it, but they are, at least we're getting there, and they're allowing these, what they call the dot plots. I don't want to get out in the weeds too far, but they're allowing people to be out there talking about the fact that we're not going to go up once or twice this year. We're going to go up 4 times. And they're allowing that. They're wanting that chatter out there, so it gives them the cover to go ahead and do it. I think rates are going to go up a lot this year, and they certainly are going to pull back on the bond buying. I would suspect that they will, after they dig the hole deeper, then they're going to start filling it right back in immediately.
Okay, are there good bargains out there right now? If so, are you purchasing some for clients, or is it too soon?
Great question. This is a difficult question. Okay, so if you are an income person or very concerned, okay, very conservative, if you would, okay, no, we're not. We're holding the cash. You don't go back and say, yeah, that stuff like Teledoc that doesn't pay a dividend, but I need income for life. It's at such a bargain level, and that's where the real bargains are, in my opinion, are in the ones that have just been hit by 70%. I'm talking about real companies, not electric vehicle companies that most are going to be out of business. I'm not talking about that, or the SPACs. The SPACs, the special purchase companies that they have out there. Most of those are blowing up. I'm not talking about those. Those deserve to die. I'm talking about real companies. And again, I'm not trying to tell you to go buy Teladoc. I'm just using it as an example. Real cash flow, real profits off 75%. That's the kind of companies out there that collectively people ought to be looking at. But you can't own those in an income portfolio. I can only tell you that we were buying those, and then we watched them go lower and lower and lower. That's part of it. You don't get to get the low. But the answer is for those people who have additional cash, who want to be more aggressive, those absolutely. And it is interesting. The longer I've been in the business, the more I see the occasional investor who literally does call when things are rough and says, okay, I got another 100,000. Is now a good time. So when those folks are coming in, we absolutely are buying, and we are, if they are the right candidate, we're buying some of the more aggressive stuff. Absolutely. Amazon's another one. Why wouldn't I want to own Amazon off 25%? But it doesn't pay dividends. It doesn't fit for a lot of people.
All right. They just hit at tapering or nudging rates up and the NAS goes bonkers.
Say that again now.
They just hint or at tapering or nudging rates up and the NASDAQ goes bonkers.
You know, it can, but we often see things the way that they're filtered to us with commentary. And what I mean by that is that they have been hinting about and talking about raising rates for a very, very long time, even as the NASDAQ kept going up, and it went up a lot, right? And so, but what we see on a day-to-day basis isn't necessarily what we've actually seen for the last 6 months. So it kind of can be a misperception, all right? So think about it that way, is the commentary changing your perspective on that? Because here's what the commentary was from the Fed itself. We are going to raise interest rates. We're going to cut back on the tapering, as we told you. Okay, so for a day, the market went, and then what did it do? Started to rise, because that was last Wednesday. And it actually, after when Powell started talking, market went straight up, and then it gave it all back. Okay, and then finished just below flat. And then it started to gather itself on Thursday, took off on Friday, Monday, and Tuesday. So what has the market done, especially in the NASDAQ, since Powell talked about raising interest rates? It's basically gone straight up. And so when we think about it on a daily moment, okay, that might be true. It could also be the perception is that's what somebody said and that's what I'm seeing. But we've been talking about interest rates for a long time. The market's ready for it. I wouldn't worry about it. Interest rates going up is a foregone conclusion. The Fed has said so. Inflation is here. They are way behind the curve. It has to go up, but the market is rallying. So I'm not saying it's at all-time highs. We've got a ways to go. But you're right. When interest rates are being raised, it does cause a distortion in the market temporarily. But I would watch what you think about that, because it's been known for a long time. Okay.
Okay. I think you kind of answered the next question, which do you think that once interest rates increase, the market will settle down? It reacts to anything said in the news, hypersensitive.
Yeah.
Okay.
It is hypersensitive. There's no doubt about it. And what we forget too is that the market is super sensitive because the black boxes do about 80%, maybe more, of the trading out there. It's not human beings. And so the black box simply says, if it hears something on interest rates, it might say, go buy S&P futures. What that simply means is it's buying the market, and so the market goes up. Or it's geared to sell. If it sees something on Ukraine, sell. It's done by computer. And so that creates a tremendous amount of volatility when we're in a high news cycle, which we are right now.
All right. Any changes in your perspective on crypto?
No, not really. Not yet. I don't know. It's not, obviously crypto's not doing well. I don't see it as a reserve currency or another alternative to the dollar at this point. And without that, I don't know how to value it. I don't. And it's not because it's, we've talked before that the whole blockchain thing is great and it cuts out the intermediaries, and it does. But there are also some needs for intermediaries to make sure that markets do function correctly with regulation, things like that. And when you have stuff that just disappears, like it's not Coinbase because that's the big one out there, but companies like that just like, oh, we got hacked and it's a big problem. Sorry, you lost your money. That's not okay. That's really, truly not okay, because the Bitcoin isn't anywhere. They can't just go get it. It's been stolen and it's gone. And they can't like go to a regulator and go, hey, why don't you print up some more of that money because it's FDIC insured. It's not. It's gone. And that is not the kind of thing that if people are going to be wanting to put a lot of value in at this point. I don't know if I'm going to be right. It doesn't matter. I can't buy things that I don't understand why they would have a certain valuation. If I can't value something, why would I buy it? I wouldn't buy a carrot other than to eat it if I couldn't value it. I have to have some way to value that. And crypto has absolutely no use, no dividend, no nothing at all at this point.
I would expect to see a move to value stock at this time, especially with tech FANG dropping sharply. Will Petso be making portfolio changes towards more value stocks?
You know, that's a hard one, because the growth out there is occurring in FANG, right? Which is why all of our clients have owned Apple and Microsoft. You know, some of them, the more growth side, have that, and Google, but they're not paying good dividends. And so if a person's need is for income, they have to own more dividend paying, which by definition is always going to be on the value side. Do we chase markets that are like growth or value? Not intentionally. Obviously, we'll see things that have greater valuations. We are picking up some valuations. We talked about this on the last Zoom. Some great valuations with dividend paying stocks in Europe. Europe is a giant outdoor museum. It's a socialist mess, and it has been for decades. They don't invent anything. I don't want to buy growth over there, but they do have some pretty good industrial companies, value oriented. They're paying 6% dividends. In a world of zero interest rates, that is attractive. So we're using those in income portfolios to do some of that. And we are also, outside of China, doing some with growth overseas, because there are some great companies in the Netherlands and things like that that really are growing, and throughout Asia as well.
Curious, is there an indicator to see how and where automated trading affects the market? Automated trading can feed on itself, correct? Would be interesting to be able to see this effect versus real moves in the market.
It would, and all you can, as far as I can tell, I've not seen a study that has broken it out to what it does day to day. I'm sure there are people that look at it and can see it better than we can day to day. But anecdotally, you can certainly see it, because there is no fundamental reason why a market will be up 300 points and then down 500 by the end of the day. There's no fundamental reason at all. Corporations don't change valuation that much. And very rarely, I will say this, there is an occasional, the Federal Reserve will have said something, or there's some geopolitical event that would cause that. But outside of that, this happens way too often. And that is going to be the machines chasing each other on some kind of a momentum trade.
How does saber rattling or war affect markets?
Depends on what it is. That's a very fair question, and one I've asked a lot, and I cannot wrap my mind around this one yet. Okay, I am not making a political statement. I am making a statement of fact. Afghanistan was a disaster, and it is certainly empowered people in the world. I don't think we come from a position of strength that we've had in the past. And I'm not saying that Trump was a position of strength. I'm not saying that Bush was a position of strength. Obama certainly wasn't around the world. America's been in decline. And this is from being able to assert its will around the world. We still are the preeminent superpower and have a tremendous amount of might in the world. And we can certainly level sanctions that are not going to be comfortable. So I'm optimistic about that, but I am not as optimistic as I normally am, because I think we've empowered the bad guys in the world, particularly China, to be worse characters and push harder. And they certainly did in Hong Kong. And they just did a flyover last week in Taiwan. It's not a good situation around the world. And we just don't have a president that gives that presence. He just doesn't. And again, that's not a political statement. I don't know how you would read it any other way. Certainly Afghanistan was one of the great tragedies for our foreign policy at this juncture.
If I wanted to insulate from volatility of China real estate fiasco and the fact that China growth is off, is that even possible to do? Is it possible to insulate from a particular fragile entity such as Evergrande?
Yeah, it is, because that's a great comment. It isn't possible in the United States. Okay, it is if it's big enough, but Evergrande is not that big compared to the GDP, the economy of China, and it's not that big to say if the whole thing went under, it would be a problem. The problem there is that you wind up with a circumstance in China where it is, they in America, we wouldn't do this, but in China, they're going to have to. They're going to have to make the average Chinese person whole on their Evergrande investment. If you put $50,000, whatever, $5,000, $10,000 down, whatever it is, on your new apartment, and Evergrande went out of business, the Chinese government's going to cough that money up, because they're putting Evergrande out of business. And the only thing that keeps China in power is keeping 1.3 billion people happy. You don't want 100,000 people out there that feel like the government stole their money. That's a lot of people to be out there talking bad about the government. So I think they're going to protect them. The bondholders around the world, out. They don't care. They're not going to protect them at all. But that part of it, when you take the whole thing, I think that it's like 0.2% of all the debt in China. It's not a lot. It's a very small number. So I'm not concerned about that.
All right. Any other questions? Excellent information, Dave. Thank you.
Thank you. Thanks, everybody. And look, I don't know what's going to happen. I truly don't. And I don't say that with any false humility. None of us do. I just know that the markets have been so great for the 40 years that I've been in this industry, and for the 50 years that I've been an investor. And they're not great all the time. This is the price you pay. But I do know this: things are a lot noisier than they used to be, a lot louder. And there's a lot more misinformation readily available that sounds smart and sounds good. Just turn it off. I'm really serious about this. And it doesn't serve us well to get more information about what we already believe, or if we're worried about the markets, to spend all of our time worrying deeper about the markets. And that's what we're here for. If you have questions, concerns, give us a call. And again, that's also the reason I love doing Saturday's program. And if you miss any of them, feel free to do the podcast. And I know Jennifer feels exactly the same way. She fills in probably once a quarter on average. And I know we both talk about how wonderful it is to be able to communicate with everyone. So again, thank you for tuning in. We love you and appreciate you. Have a great rest of the day, and stay healthy.